So we have 11 positions within the portfolio. We can go up to 18 positions, and we're still looking for deal flow, with reasonable work in progress. We do like to have cash levels around about 15–20% to give us the firepower to invest in the existing portfolio on bad days in the market. However, there is scope definitely to make further investments. It's very strategic, and what that means is that we've got quite a level of engagement with the management teams. We're looking for a value realisation catalyst of some sort, and really looking to deploy value, generate value over a 3 to 7 year investment horizon. 15% compound over the long term, that 3 to 7 year period, is achievable. If you look back at the old Horgevet Smaller Cap Index, which is now the newest Smaller Cap Index, that's achieved a return of 15.4% since 1955. We can achieve diversification in a portfolio between 12 and 18 companies. We do have quite a diverse range of different sectors and completely different businesses within the portfolio already, within the 11 positions. We don't really want to go up above 18 positions because actually one of the real keys to this strategy is that we get the opportunity to spend quite a lot of time doing diligence on the companies we invest in, and most importantly engaging with those management teams once we've made the investments. So we don't want to spread ourselves too thinly. Gamma Aviation is a business that we've recently invested in, around about February time this year, but we've known the business for over 18 months. We've been doing due diligence on it. It's a lovely little business because it's an asset manager in the private airline space, and therefore it has recurring revenues. It's got maintenance contracts, and the opportunity here is that there's consolidation in the industry, and this business has raised money to make acquisitions worldwide. One of the main shareholders, we went in alongside them, is Hutchison China Wampa, massive company obviously with exposure in the Far East, and they are really seeing this as a strategic investment and helping the business get into sites in the Far East. So very exciting for us, a long-term consolidator. At the moment they're in the top 3, and I expect over the course of the next 3 to 5 years could easily be in the top 1 or 2 in the sector. One of our latest investments is a company called Volex, and Volex has been around for a good number of years already, and they manufacture power cords, and that's everything, or in the past it's everything from your iPhone charger right the way through to power cords for sophisticated applications including CT scanners and MRI, and they've really refocused their business into that higher margin type product, and there's a lot to go for with this business because of that reorganisation, and also new markets like Tesla, for example. Good management team, and probably one of the least strategic in the portfolio, but great catalyst for us to be able to capitalise on, and ultimately there may be a demerger of the different divisions within that business, but most likely a trade exit, I suspect, over the next 3 to 5 years. The evidence through the Horgevet newest Smaller Cap Index shows that you can make money from this sector over the long term. This fund itself has got a long-term investment horizon between 3 and 7 years. So therefore it suits the profile of a SIP investor, ISA investor, but an investor that is prepared to take non-index correlated returns and invest for that long-term period.